Dmitry Zaytsev is here. It's Dmitry, welcome back.
Nice to see you, James.
You too. That's so weird. Just walk you on the set while I'm talking to Margot there. I can't say hello. I can't shake your hand. Nothing.
Tight schedule today.
Tight schedule. Is that what it is? I guess, yes. So we were going to talk about, you've been following very closely the potential merger. I think we're going to restrict the conversation to the potential merger of Aphria and Green Growth Brands, acquisition of Aphria by Green Growth Brands in an all-stock deal. And so they've made an announcement today where Aphria is positioning itself as, at least management is advising its shareholders not to do anything. And Green Growth Brands has more or less officially made official its offer, which remains inadequate relative to what was said by Aphria management previously. What is your take on all of this?
Yeah, so looking through all the filings, as you know, I've been following a lot of these, I guess, this little dog and pony show for a while. And I think this was just Green Growth Brands, their official sort of offer submission. Previously, they were just talking about it. This is the official submission that they talked about in December. So I've been digging into a bunch of information on this, and with a friend of mine, he just wanted to shout out Eric, helped me out a little bit here in the due diligence process. But we found some interesting, I guess, irregularities in terms of the structure of Green Growth Brands and the interrelationship between Aphria and a couple of key players, I guess you could say.
Sounds very intriguing. Now, so when you say relationships, are you implying that there was a relationship prior to the announcement of the acquisition?
Yeah, absolutely. And a relationship not just a month or two, this goes back years, actually. And I've actually brought a little bit of a deck to walk you through maybe 7 or so slides that show some interesting things.
All right, let's do it.
Right, so this is from the offer. So this is the official offer. So first of all, just talking about the offer, it's very rare to have a company offer shares above its market price and at a discount to the current valuation. I've never seen, or it's probably so rare that it's 1% of occurrences. So this is right off the bat is a suspicious sort of thing.
So you mean with Green Growth saying we're going to take you out and our stock is going to be $7 a share by then, even though it's only $4.25 now?
Yeah, it's ridiculous. And doing a financing at a higher price, a significantly higher premium, that's very rare. But so going back to this actual slide deck, you can see that they secured a $150 million investment from All J, it's called, and Green Growth has agreed to pay the investor a commitment fee equal to $7.5 million, payable by issuing proportionate voting shares to the investor. So in essence, they've said they've locked up $150 million, but they have this little covenant where they're paying them if the deal doesn't go through, which is very, very unorthodox, I guess you could say. So that got me kind of thinking. So I looked into All J's, and if you just keep it on the slide deck, honestly, they actually share the exact same office, these All J's guys. This top thing is from the actual press release, and then this is from Green Growth Brands' website. They actually share the same address, which is very interesting. So a company that is going to be the key investor for $150 million is sharing the same address as the company they're investing in. Okay.
So you mean, when you say the same address, do you mean like in the same building, or is it like in the actual same suite in the same building?
It's identical. It's literally identical. It's the same suite, but it's the same building. I think it's a different suite, but it's in the exact same building. And $150 million, that's a little, in Ohio, I think that's a little suspect.
So then, I mean, okay, let's step back from this.
Sure.
Who is potentially hurt by a closer relationship than is actually disclosed?
Well, I think it's one of those things we're going to see later on, where I guess having a showing of this acquisition, hostile takeover sort of thing, when it's actually a lot more friendly. And when executives, for example, I know Vic was on the board of Green Acres on their website. They removed that. There's a lot of sort of a a lack of transparency, which to me, as an investor, potential investor, is very concerning. And so for me, I'd rather, cannabis is already a high-risk investment, and so I'd rather see a very clear path and a very clean structure with a lot of these things. So just going further, All JS, so the same company that's doing the $150 million acquisition or investment, they also purchased the shell, which Green Growth Brands was RTO'd into, and they actually gained a pretty sizable share position already, even before this investment. So if you look on Google or any other filings, All JS, there's no mention of it doing any other financings, doing any other kinds of investments before this November 12th press release. So to me, I did some more digging. That's what we do. We do digging. And so if you pull up the next slide, you see the top 2 investors currently. So going back to what I said, is All JS, which represents about 20%, and Green Acre Opportunities Corp, which is an Aphria subsidiary. And together they make up 30% of the actual ownership structure. And so you say, okay. So this is just showing the next slide here that the group GA Opportunities this is on their MD&A, of Aphria's MD&A.
Right.
You can find it on every quarterly filing. It's there. They talk about all the stuff they do. This is just to show you that they're related, obviously. Next, so we actually looked into this, and so
wait a sec. Aphria already owns Green Growth Brands.
So they own a 10% stake through their GA Opportunities.
Oh.
So they already own 10% of it. So it's kind of strange to have them own a subsidiary that then is taking them over in a hostile bid. So going further to the next step, I'm sorry I'm taking the soapbox here, but we want to...
I'm impressed with the depth of your research here, by all means.
Yeah, and so interestingly, the one thing I did find in terms of filings, All JS Greenspace, when it was incorporated in Ohio or in an LLC there was an agent, and his name is Mr. Friedman, and we found him on LinkedIn, and it turns out he's part of the Schottenstein Property Group.
Huh. So it sounds to me like you're concluding that there's a great deal of interconnectivity that is not necessarily properly disclosed, that might cause one to question the legitimacy of some of the disclosures representing that this is a unsolicited bid and a arm's length transaction, and so that's pretty serious stuff, and interesting. But certainly the cannabis space has been, tarred a little bit with some of these not properly disclosed transactions that ultimately constitute self-dealing to directors and insiders at the expense of retail shareholders. Is that a fair assessment?
That's very fair, and the one concerning thing is a lot of those issues you're referring to that have tarred the cannabis space have come from this one company.
Okay, so what's the play here? Is there, it's not to go long Green Growth and short Aphria or vice versa, is it?
It's really tough to actually short Green Growth Brands and all this. I think this is one of those things where you just stay away, you let things sort themselves out. Personally, I'm not taking any kind of positions right now, and many of my friends and colleagues are also not doing so.
Okay, so let's say that I don't care about the optics and I don't care about the non-disclosed relationships. I'm just looking at the fact that, okay, so if there are insider relationships and but the optics have to satisfy the regulators and the regulations, so therefore, if I'm an Aphria shareholder who is otherwise uninterested in any other aspect, I'm just an Aphria shareholder, a retail shareholder, I want maximum dollar for my share if somebody's going to take me out. I've seen Aphria stock at 20 bucks before. I don't know why it's not there now, except for maybe all of the negative press. So is it the Aphria shareholder who's going to drive Green Growth Brands to tender a higher offer? Or to propose a higher offer price, which suggests that, really we should be buying Aphria, and arguably we should be buying Green Growth Brands, because if it's the same guys pulling all the strings on both sides, they have the ability to move the price where they want it to. So, isn't there an easy win here on the long side of both companies?
I'll say one thing, that Aphria does have real assets in Canada, absolutely. They're impressive assets. You know, Leamington, I've had some friends tour those facilities. They're very impressive. And I mean, they do have product out and all of that. With that said, the way this structure is actually set up, and we'll see later on as well, is because these various groups have a position already, so the All JS already has a 20% position in Green Growth Brands, they're already diluting, by acquiring Aphria, they're actually diluting the current shareholders because they're giving them paper, right? The stock, the Green Growth Brand stock, which there's really not a lot behind, right? There's really just a bit of financing, and you know, we can argue about it, but there's not a lot behind versus some of these other, compared to some of these other MSOs. And so in essence, it's an automatic dilution of Aphria shareholders by at least 20%. And this is before their $150 million investment. So in essence, what they're doing is they're investing, and it's like they're getting into Aphria at a much lower price and diluting the current shareholders. That's why you should care. And so going back to this deck, because I do want to finish it up before we end this interview, or talk about other things. But All JS, this Schottenstein's property group individual. What's interesting is there's an article, if we can go to the slide, from 2017 where, kind of sounds familiar, officials from a Canadian medical marijuana company say they partnered with a Columbus family known for fashion retailer American Eagle and DSW. Where I think I've heard that before somewhere, and this is from more than a year ago. And then the other thing I would just note is the Schottenstein Aphria LLC is one of the 185 companies. So
there's a company called Schottenstein Aphria LLC?
Yes.
That's pretty blatant.
That's extremely blatant.
Is that just a new form of disclosure? We'll just name everything after ourselves.
Yeah, I mean, they just put it out there. So look, Schottenstein Aphria LLC, this gentleman who heads the Schottenstein Group, which incorporated All JS, which got the Zenatic or whatever, the shell, to get Green Growth Brands, and is also a 20% investor currently, and is doing the next $150 million round. So if you put it all together, right, this is what it kind of looks like. And honestly, I just put this together right now, like an hour ago. So mind the formatting, but in essence, it's Aphria owns GA Opportunities, Schottenstein's own the All J, and together they make an investment into Schottenstein Aphria LLC, right? And All J also sells this Xanthic, whatever, pharma shell to the Schottenstein Aphria LLC, and then they RTO it into Green Growth Brands, which is now acquiring Aphria.
And how many shares then does Schottenstein and Company control of Green Growth Brands? That's the 150.
That's the that's the All J guys, which they got a good chunk of it through the RTO because they had the founder shares of the shell.
Wow.
So they acquired the founder shares. So they currently, before their $150 million investment, already own 20% of GGB.
Wow. Interesting and fabulous investigative work. Thank you very much for filling us in there, Dmitry. We'll come back to you as usual again, and by all means, keep up the good work.